This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. Well, on the gold market situation is also very interesting. Will be on coming week. Well, guys, if you would like to know what we will trade on the current week, visit our forum and read the weekly research, since the foundation for our trading on the coming week stands on the weekly time frame, and that is the daily video research. So here we will discuss only how we will intend to take the position with our setup. On the daily time frame chart, on the first glance it could be seen as not very significant, because here we do not have any patterns or any suggestion about where we could take the position. But still, daily chart holds and contains significant moments. First of all, we see that slightly higher than market now stands. It's around 1345 area stands the significant resistance for the daily time frame. That is the monthly pivot point that has been tested yet by the market, and take a look, that is the daily overbought. And that probably will be our first destination point and the level where market could take the pause for some time or even show some bounce to the downside, because hardly market will pass it right by the moment without any respect. This will be a really significant area, and this area stands 30 bucks per contract higher than market stands right now. Second moment here is, take a look at this pattern, A, B, C bottom. That looks like the big ABCD pattern on the daily time frame, and this pattern mostly has the relation to weekly chart, weekly analysis. The minimum target probably hardly it will be reached within the coming week, but the minimum target of this pattern stands right here. It's around 14 even, because that is the 618 minor extension of that ABCD pattern, and that our, let's call it, a bit extended target. Trend has shifted bullish here on the daily time frame, and now we will try to understand how we could take the long position. Now let's shift to the 4-hour time frame chart. On the 4-hour time frame chart, sorry, I will expand it a bit. Okay. On the 4-hour time frame chart, we see that market, as we have suggested, has hit the 1618 target on Friday. That is the extension of that pattern, A, B, C bottom. And we said on Friday that as market hasn't quite hit this target just for some bucks, probably it will do it on Friday, because market very rare left behind significant targets, and that really has happened. And this moment that market has hit this target gives us the great assistance, because now we could say that probably market will show the retracement down first and move to the monthly pivot point second. Because for instance, if we would have the 1618 extension target slightly higher than the monthly pivot point, in this case we could assume a opposite scenario, because market gravitates to the target, and very probably the market first should hit the target and then show the retracement. But as this target has been hit on Friday, then we could say that probably retracement should happen prior the upward continuation to the monthly pivot point. This is really significant. Now let's talk about the possible level of the retracement, possible support that market could reach within this retracement. Since, as we said, market is not at overbought, this retracement should not be too significant to the downside. And personally, I like this level. That is for our confidence support around 1295, 1298 area. We could call it even 13 even. That includes the weekly pivot point. But this level is significant not only due to the confidence support and the weekly pivot point. This level is significant from the other point of view as well, because that line is the upper body of this broken wedge. And to keep bullish scenario as perfect as possible, as clear as possible, market should remain above this line. So if market will return right back down inside of the body of this wedge, that will be not quite bullish scenario, and that will add concern and warnings about overall further upward continuation. Well, it will not mean that market will not be able to return right back, but that will be not very pleasant move if market will return right back below this line. This will be a bit warning sign that will hold some menace for possible downward continuation, and could be the sign of the failure breakout. So if market will return right back down, that's why this level is really significant. And if market will hold there, and I hope that this will happen, that will just keep the bullish scenario intact, and this action will be just perfect. So market returns right back, retest the broken line, test the weekly pivot point and confidence support, and turns right back down to the upside. That is what we would like to see. And as usual, guys, we don't want to see such sort of candles to the downside. So you can see this nasty black candle to the downside, do not take any long position. We need to see some gradual retracement down. Something of that sort, gradual move, not that sort of action. Well, also I suggest you to read our fundamental part of the research, because currently major concern stands with the FOMC meeting that should take place at the end of October, and the speeches, the talks that we now hear and see in the news looks as too smooth and too sweet. So major idea is that Fed Reserve probably postpone or even cancel the announcing of the contraction of the quantitative tapering of the quantitative easing program due to the shutdown of the government, since the shutdown of the government has made the negative impact on the US economy, and that the tapering of the quantitative easing program in such circumstances is not very logical. But for me, guys, it's too obvious. Because currently, if you'll take a look at the corporate earnings reports from the Morgan Stanley, from the Google, you'll see that across the board many companies report about the good results. Also, I suspect that Fed Reserve already has the numbers for the September non-farm payrolls release, although we do not have it, but they probably already have it. And I can't exclude that still some hint, some commentaries on that will increase the probability of the tapering of the quantitative easing program will appear in the FOMC statement on at the end of October. I think that could be some kind of the shock for the markets, and that could really lead to the drastic changes on the gold market. But since we have the FOMC meeting 10 days ahead, gold still has the pretty much time for showing some appreciation to our closest targets, and later react on the possible FOMC statement. So on the coming week, our setup is bullish, and we will try to trade the setup that we will have on the weekly time frame chart.